Hello and welcome to another update video about Ethereum. I think we can make it short here. We have not really got any exciting additions to the last video. However, we are moving up a bit. We broke out of this channel to the upside. All of that, however, is not really a signal that the downtrend is over here. If you remember, we talked about that this ideally is an A, B, C structure where we will still see a C wave to the upside. That view remains as long as we're holding above the white support box, which means, or at least reverse within it, which is at 1167. Below that, I'm looking more into a direct sell-off without this leg to the upside, which could take us into the 1270, maybe even $1,300 region. In addition to that, okay, we said maybe it can come down to it around about 1164, yeah, because we measured here the extensions. So as long as it stays above 1164, we could still look at higher in wave C. And I already explained in the previous video that this whole move that happened here just looks much better with another C wave to the upside at least. So A, B, C. It would just look much better, and the right look is important if we talk about wave structures. But you know, the price sometimes does ugly stuff, and prices sometimes do things, or charts sometimes do things which are unlikely. So we then need to know is the key support levels below which such a move to the upside gets significantly less likely. Not impossible, but significantly less likely, and that is clearly the 1167 level, or if we want to give it a little bit more space, the 1164 level. Now, what can we talk about, or what can we say about the most recent price increase here, the breakout of the channel? Well, it has a lot of overlaps, so it doesn't really look exactly exciting or impulsive, and an impulse is what we would want to see after this move down has finished, because the move down can be counted as per Elliott Waves as a W, X, Y pattern. I did explain yesterday that the X wave here is probably a triangle, A, B, C, D, E. It's a very complex correction. It's a very complex correction here. So it's not exactly easy to count this. It's not exactly easy to interpret this. And as a trader, it's also not exactly easy to deal with this, because it is a frustrating range. It takes a lot of discipline to deal with it correctly and to not get to not lose all your money, basically. So risk management, I can only repeat it every time. Risk management is very important. Put your stop loss in place, have adequate position sizing, be extremely careful with leverage, I would say. But that's entirely up to you. You know, you are responsible for your own money. If we then look at the substructure here, how is this wave Y to the downside emerging? The wave Y consists of A, B, C. Yesterday I said, okay, most likely, and that's the most reasonable explanation, that here this was the A wave, this was the B wave, and we would move down in C. But in the C wave you want to see an impulsive move down. There was no impulsive move down. So it is more likely for me that this whole thing unfolds as a triangle. A B wave can be, just as an X wave, a triangle. Again, an A, B, C, D, E triangle. There are certain rules that need to be followed. The chart follows this at the moment. So A, B, C, D, E. So as per this, we could expect here maybe another leg down, another leg up. This here could be the C wave that's currently being put in place. And then we could eventually still see this C wave to the downside. So it doesn't really look like at the moment that this move to the downside is finished. A break above the X wave high, which is at 1215, would give us a strong signal that the move to the downside is finished. But before that happens, I am looking for another impulsive wave structure to the downside, which would happen in 5 waves. So again, the C wave would be an impulsive move down, something like that, 1, 2, 3, 4, 5, and that should not be so choppy. We shouldn't see so many overlaps. So I'm rather looking here into this as a triangle. We can also add the trend lines here. They sometimes get a little bit, we sometimes have to change them. Yeah, but you can add trend lines here, and we're heading here into the apex of a triangle. What would be the ideal target for this C wave? We can calculate that as well. That is normally the 61.8% extension of the A wave, but we probably have already moved above that. Yeah, that's fine. But that's sorry, that's not the problem. We've now reached a 1-to-1 ratio. So there are only ideal targets here in a triangle. There are certain rules, but it hasn't broken the rule. The rule is that the C wave must not go above the A wave at any point. So at some point, ideally, we are looking at the reversal now here for the D wave, then another leg up for an E wave. At least that is what the lower level wave count at the moment suggests. That can change because this is pure micro counting. I'm going to take out here this channel. And yeah, I think we need to be a bit more patient here, probably have a little more sideways movement. But if you see a break above the A wave, 1206 or 1207, that is an initial signal that the triangle has been invalidated, because the triangle must not break, or the price must not break above the A wave. Then the triangle would be invalidated, and it is either something different or something, well, it will be something different, but it's either another bearish set, or let's say another trend continuation setup to the downside, which we would then have to look at. But at the moment, I think the triangle is the most likely pattern, or it is a more bullish pattern, but then the price would need to move above 1215, or what did we say, 1217 here. No, it's the X wave high we said. Yeah, let's say 1215. Yeah, above this high here we need to move to confirm that. Yeah, I want to see that confirmation. It's otherwise a very, very uncertain environment and a very complex structure. Definitely not easy. Definitely one of the most challenging structures we've seen in a long time here. Absolutely. I mean, this is, and I think it did go quite well. I mean, it hit all the support areas here, but still a frustrating range. It got rejected very often up there. We then morphed into an ascending wedge, a bearish pattern. It broke down. It's now nearly reached the next support area, but still, I know it can be very frustrating. It is very frustrating for anybody who's trading this as well. And it is always frustrating when certain potentials, which are in the chart, like a bullish breakout potential to the upside, even if it's only short term, if these get rejected, and the price then is rather going, yeah, sort of the other way. So I think we need a bit more patience. This could go on for a little while, a little longer, and then keep an eye on these critical support levels that would lead to invalidation. Okay, and that's my update about Ethereum. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. And also, if you're interested, check out our trading course that we offer on morecryptoonline.com. Thanks a lot for watching. Bye-bye.